All right, market recap for today, March 27th, 2025. Today we had I'll call it a high time frame consolidation day. We made highs, we made lows, but we didn't really have a one overarching direction. Look in the hourly, AM session played bullish, lunch happened, we reversed, and then PM session played bullish and then reversed. Right, so no real direction. Going into today, I don't really know my bias. Really, I was waiting to see what market gave me at 8:30 because, I mean, looking here, it really doesn't give me much. There's no direction. We disrespected this, so in a sense I was bearish. Came back up, used it as an inverse, so I was bearish. But then we took out this low and then reversed right off that. So if we played bullish, then I would have played bearish. But since we played bearish right off the bat, taking out this low and immediately retracing, then I probably would have played bullish. Now in the 15-minute, we can see London session does absolutely nothing. Plays bearish, switches to bullish, switches back to bearish. No real help there. With what I pointed out on the hourly, I was bearish to take out this low here. But once we did that and came right up off of it, I had a feeling that we'd go long. Not a good enough feeling to take it, but enough of a feeling to consider it. Um, I actually, yeah, I had everything calculated. No, I don't think I did. I was looking at it trying to enter, but I couldn't do the calculations in my head quick enough with trying to size the position. So price rallies above these relative equal highs, and then immediately London session closes at 11. So lunch starts reversing, playing bearish. I saw this. I was gonna take it, but it took too long to reverse. Right? I didn't have time to sit on the charts and wait for it to consolidate for a bit, as you'll see on the lower time frames. But lunch comes down. We take out this low, retrace, pretty high actually. When I saw this real time, I thought we were gonna continue higher, but I guess not. Then we came back down, took out this low again, and then rallied once again, and then took out the low once again. So I don't see a trend in this market. We took out lows, then highs, then intermediate lows, then intermediate highs, and then lows. So today was really just playing off the liquidity sweeps. 5-minute, you can see market opens this candle. We quickly went down and back up. Had a little pause here during the macro. Touched this. This is where I took my trade. I took a short here. There's an SMT of these highs. I took a short here, targeting this low. Obviously, I took out profits and went to break even, but it was not the correct overarching bias. But that's what the 15-second can do for you. It can have you be correct on the short time frame and still win, but incorrect on the higher time frame, which is okay. So we rally, take out these relative equal highs. There's not much up here except inefficiency, and well, I don't think we have enough energy to break out of that right now. So this macro happens, and then we reverse. So I saw this high here. I'll say that for the 1 minute. So we break down here, take out this low during lunch, and like I said, I thought this was definitely play bullish from there. Didn't see an SMT of these lows, I believe, so that right, because if we look at this bullish move of AM session, equilibrium is here, nearest low is there. So it's a good place to reverse, and we do so. We do retrace, but only up to this 5 minute right there. I love how there's inefficiencies here and here. Price spikes, but what does it do? Closes within it. It doesn't disrespect it. It doesn't go any higher. It doesn't close any higher than that. Then price tips over, comes back down, takes out these lows, consolidates for a bit, get an SMT of these lows, as you'll see on the 1 minute. Play bullish. Oh, that makes more sense. I'll get back to it on the 1 minute because it's kind of hard to see here. We rally kind of with big retraces. Last hour of trading, take out a high. What's left? Lows, right? So we come down and sweep these lows and then meander off to close the day. 1 minute time frame. This is going to be a trade of the day right here. So start relative equal lows 1, 2, 3 down here. That's the draw, in my opinion, based off the hourly. We had this fair value gap ran through and then came back up and respected there. So 8:30 opens, we rally up here. For some reason, there's no liquidity taken, no nothing, no SMT. Then we come short down here, sweep this low, continue. We start to peter out, right? We lose volume, all volume. We get a low time frame SMT between the 41 candle and the 43 candle. We take it on NQ because this high, if we're playing bullish, which I believe we are at least to a retrace, is here, right? So this SMT, then we get a 15-second change in the state of delivery and a fair value gap. We enter on that fair value gap there. Stop a little bit below the last inefficiency in that bullish run that created the change in the state of delivery. Now, when I was looking at this trade, I was looking at taking it up here, max, like that would have been my final. Then the reason for that is because I thought we would continue bearish. Why we didn't, I don't know. I think it has to do with the some higher time frame, like daily or 4 hour, where this is supposed to be a slower day. Well, no, it was a pretty fast day. I don't understand why it reversed here. I'll look at the higher time frames. But we get respected off this 1 minute. We can target equilibrium or highs here, all resting there. And if you're targeting these highs all the way up here, that'll get you a 1 to 13.5. Now, the trade that I did end up taking, let's just shrink this. The trade that I did end up taking was up here, right? Because in my mind, I was still short. Now, looking back after taking out these highs, we retraced during the macro, obviously. But the way that I saw it is we're still bearish, right? So we take out this low and then we retrace this move. So during the macro, we retraced, hit the high of the retrace, SMT of these highs, take a 15-second short after a change in the state of delivery, targeting. This is the first thing after a 1 to 2, and then I had these lows down here targeted. Obviously, I get a profit, and then I get stopped at a break even. Why would this not have been a trade I'd take in hindsight is because we did close above these highs. In my mind, that is a change in the state of delivery in itself, right? So that means that it's likely that we're going to just then retrace and then play bullish from there because we closed above these highs. And if we close below these highs or, lower on ES, then I would have liked the short and it probably would have continued. But we stop in this 5 minute as well as this 1 minute. Rally higher, take out this high, continue, and then here comes 11 o'clock. So the 10:50 to 11:10 macro right here. We get an SMT of, so the reason why I really like this trade here, if it presented an opportunity, was because one, it's during the macro. That's pretty safe. 2, there's an SMT of highs. But third and most of all, we played bullish AM session, which means that once London closes at 11, we are likely to see a retrace of AM session's move, meaning playing bearish. So we do that. Unfortunately, it took a while for us to get a good solid change in this data delivery, even on the 15-second. So I think, yeah, I had to go to class at this point, but it still respects it. I mean, there's this 1 minute fair value gap over here. Once, twice, 3 times used bullish. Breaks through, validated inverse now. 1, 2, 3, 4 times bearish. Lunch happens, floodgates kind of open, target all these lows down here, take out this low, retrace up, 5 minute up here that we stop at. We retrace lower once again, taking out this low, stopping, reversing, coming up, and then here we are, algorithm opening back up. If we are going to continue AM session run, which at this point I could see it going either way, but since we took out lows first, well, actually no, we did take out this high, which I have seen in other days satisfy the liquidity, and then we just tank. But since we had an SMT of these lows here, right, opposing liquidity if we're going to continue AM sessions run, meaning this low is safe, right, if your bias is right. So then we get a change in the state of delivery on the 15-second. Fair value gap presents itself. We enter, stop below that fair value gap or any that are lower, targeting equilibrium of this move there. Because again, am I super confident that we're going to play bearish or bullish? No, because this is a really large retrace to continue playing bullish. Plus, the higher time frame, in my opinion, is bearish. So finals at that equilibrium would have bagged us a 1 to 6, and then we continue higher. We get another retrace here during the macro, pushes us higher. And last hour of trading, we take out highs. So what does that mean? That means all that's left is sell side. So from here, we're going to target these lows and these lows over here. Now, on the hourly time frame, the reason that we did not play bearish today, only reason I can think of, new week opening gap, constant encroachment gets respected here, right? And in my mind, we filled this and we needed a retrace because yesterday was huge. All right, this is a huge day. This is not enough of a retrace, in my opinion. Now, this reaction off constant encroachment showed us that it's validated, I think. Now, this is the point where I'm getting fuzzy, and so I'm just kind of I'm saying stuff to try to make it make sense in my head. So anything you hear from now on is just me talking. A lot of that is the same throughout the whole thing. But the reason we did not continue bearish today and instead reversed to play bullish and retrace is because of this new week opening gap. We reacted off its constant encroachment at night. That gave us a retrace, but not enough, right? And that high of that retrace off of constant encroachment happened at 11 p.m. and it wasn't enough. Look in the 4-hour daily. Okay, let's look at this. Where is this? Where is this close? 116.50. Okay, so that already filled it. Yeah, okay. So it's not the new day opening gap that causes us to play bullish. We take out the lows. We kind of accumulate, then take out the lows. It could be that London is accumulation, manipulation, distribution. It could be lows, highs, accumulation, manipulation, distribution. That's the only thing I can think of, right? We manipulate below these lows, trip people in, play long. That's all I can think of right now, but we'll see what happens tomorrow. Speaking of tomorrow, it's Friday. Usually we get TGIF, but as you can see, there's not much to retrace on. So that means I'm looking to get another bearish continuation candle. Now, actually, I like that hourly. We just took out this low and we're retracing. I'd like to play bearish. I'm looking conjugate encroach under this wick, a possible point for London to aim for so that we can play bearish, or maybe even just these highs, playing off of this new week opening gap from the other side. But again, well, it really depends what we see in the morning. So this has been your market recap for March 27th, 2025.